Omkar is with us on the phone line. Omkar, first reaction. Revenues are higher than anticipated, but I think what is your first reaction to operating margin of 24.5%?
Yeah, I mean, it is much in line with an expectation. It's a positive news in terms of revenue. It shows the resilience in terms of the demand scenario. In case of the margins, margins are likely to be in line and in line with the expectation in some sort of a moderation. But the major things that one should look upon, the order book still remains strong. We were expecting some softening of the order book for the quarter, but looks to be strong at 7.8 billion at versus $8 billion in the previous quarters of average. So it's a bit positive surprise from than expected.
Is the positive surprise you said the order booking?
Yes, and also in terms of revenue.
So order book has come at $7.8 billion. That's the number you're talking about, Omkar, right?
Yes.
Right. Mahatesh, your first reaction, margins at 24.5%?
So let's look at it this way. The revenue on a constant currency basis sequentially is much better than what has been projected. The margins are also sequentially improved, but not to the extent that one would have anticipated. One would have anticipated a 90 bips to 80 bips kind of in margin improvement. It appears to be just about 50 bips. And that's partly because the attrition levels are at just 21.3. It was 21.5, if I remember correctly, for the previous quarter. So the attrition has not come down to the extent that the company sounded in terms of their guidance. They didn't obviously give a guidance number, but the general assumption was that the attrition levels would fall down as the manpower intake was steady and stable. So the revenues are good, the order booking is good, the margins have obviously missed, but that's got to do with the attrition, which is still lingered at a higher level, and probably that would mean that they will achieve their margin improvement in subsequent quarter.
Right. But Mahatesh, what is your first reaction? You would say the numbers are in line with some hits and misses?
I think these are better numbers from a shareholder's perspective or from an investor's perspective, simply because you have a special dividend also been announced. That is number one. And number two, the revenue growth has in a way accelerated with the order book also growing strong. So I would reckon that these are very good numbers.
Well, yes, I think what is very good is the fact that the top line growth has come in. Well, yes, what is very good, I believe, is the fact that the top line growth has come in much stronger than expectations on a constant currency basis. The top line has come in at 2.2%. Our estimates and the street estimate was anywhere between 1.2 to 1.5%. So that is something to really watch out for, and that is something which is good. But the margin expectation at 24.5% is a little lower than expectation. Yes, the expectation was very wide this quarter, around 24.5 to around even 90 to 100 basis point improvement. So at 24.5%. I will call it a bit of a miss, at least as far as margin is concerned, because while the company has delivered on the top line basis, margin is something which is a tad bit of a miss. And even I know while analysts are pegging that $7.8 billion worth of order booking is in the band of 7 to 9 billion that they had guided, but there was this expectation that it could be towards the higher end of the range, so it's right in the middle of the range. Now, talking about the other commentary coming in, Samir Seksaria, the Chief Financial Officer, says that improved productivity, currency support, and abating supply side challenges help to expand our operating margin in Q3. This gives them the ability and greater confidence to steer the profitability towards our preferred range while continuing to invest in building newer capabilities to support growth as well as market share gains. So at least for now, they're maintaining the intended band of 26 to 28% on a long-term basis, and the earlier stated guidance was that it will be 25% by the end of this year, and for now, they seem to be holding on to that. So maybe they are expecting some sort of improvement to come by in Q4. Even if I look at the other internals in terms of verticals, North America and UK has led the growth with 15.5% growth, but continental Europe is slower at sub 10%, as well as if you look at India business, that was up around 9%. And in terms of industries, it's retail which has done quite well, while BFSI grew at the slowest pace of around 11.1%. Now, why BFSI is important is because that contributes almost 30 to 35% of companies' revenue. So that will be important to track. Overall, in my sense, Pankaj, the numbers are broadly in line with expectation. The revenue growth is something that the street will really give a thumbs up to. But other than that, margin wise, profitability wise, I'm not seeing any big bang number coming in.
Right. Mahantesh, what would you make of the dollar revenue number, which has come in at 7,075 million dollars versus estimates of close to 6,950. So it's a good 70-80 dollar increase than what the street was expecting.
Yeah, so the revenue is something which has come in quite well, despite it being seasonally a weak quarter. There would be furloughs around this time. But then, while the revenue has come in good, the order intake has also been strong. That $7.8 billion order book intake compared to 8.1. Now, 8.1 was what was the order intake in the previous quarter, but I would still reckon, given the overall conditions that exist, a $7.8 billion order book intake this time around is quite strong. The only disappointment, like I said, is on the operating margin front. Probably that's got to do with the way rupee has, dollar is once again strengthened, rupee has weakened, and that could have meant a bit loss alongside the large attrition rate of 21.3.
Mitul, your first reaction to the numbers in terms of CC growth, better than estimate, margins in line with a marginal miss. What is your reaction?
Yeah, overall performance was decent in terms of revenue growth was a bit positive surprise. But there are two, three important parameters where we see that there is a disappointment. Of course, margins we estimated close to 25%, 24.9% EBIT margin, but it came just 24.5, and which is below our as well as state estimate, despite attrition being stable. And most importantly, overall employee addition has been negative this quarter. So number of employees have reduced despite that employee cost has gone up. Geography wise also, this Europe, Asia Pacific, Middle East all are now growing in a single digit growth. So that is also a concern. And in addition to all this, BFSI sector is also reporting very low growth. So these were the key drivers for the company over past several quarters, but now turning slowly negative. Even this order win below 8 billion is also, we are not very positive on that side also. We believe that it should have been slightly better. The situation is uncertain in that situation, decent enough, but it will not support the valuation of this company at this level.
Right. Omkar, any other details that you have that you can start sharing with us? CC growth at $2.2, revenue growth looking in stronger than anticipation. Constant currency was expected 1.4, it came in at 2.2%.
Yeah, definitely. I mean, in terms of the growth that they have done in the CC terms is definitely a well demonstrated execution part at this such kind of a scale, because they have ramped up the deals that they have won in the previous quarter and previous quarters, and demonstrated a well execution part in terms of at such a large scale. And the demand is still continuous resilient in terms of digital transformation and the cloud transformation that they are happening. So it's clearly, I mean, witnessing the dependency on IT services pack of these all businesses going along. So it likely to be sustainable in terms of going ahead, even within the bad times or uncertainties.
Right. Mahantesh, any reaction that you expect in terms of earnings?
See, the stock is already up this today, okay, in today's trading, and I would reckon the special dividend payout of 67 rupees that they have done this time around, making the total dividend payout of rupees 75 per share, is quite a positive. So the payment date, incidentally, for this dividend will be 3rd of February. The record date is about another 10 odd days, 7 odd days away from now, from today. It tells me that investors will, if at all, would like to dump the share, will be post the dividend, not until then.
Right. Mitul, you were talking about valuation. Can you tell in more details what does this mean in terms of IT sector as a whole as well, or each company has to be taken case by case?
We need to check each company case by case based on the geography wise exposure, currency exposure, as well as vertical wise. But in case of TCS, it is already trading at 25x, and after this result, we would not see any upgrade in the earnings and valuation at this juncture of high level of uncertainty. 25 seems to be slightly expensive if we consider long-term average being below 20x. So even if we give 10-15% premium to historical valuation, it could be 20 to 23x could be a comfortable valuation. So we believe that after this result, commentary would be very important. Wherein, if in case any outlook positive towards FY24 or US recession related commentary would be critical. Otherwise, considering the past few commentaries of the Accenture and few other IT giants and headcounts by various Amazon and all other top IT companies, it seems to be slightly negative environment for the sector, and valuation sustaining at premium level is not possible in this situation.
Right. Omkar, but just going into the numbers, what do you think stock was pricing in? Omkar, what do you think the stock was pricing in with the previous few days move? Okay, I think there's an issue with his line. We'll try and dial him in again. Mahantesh, what do you think the stock price movement was pricing in?
I think the stock was pricing in a margin improvement with recovery in the growth rate on the top line front. Very often, investors also look at it from a medium to long term perspective for companies like TCS and do not take a short term perspective. And that long term perspective would tell one that since they have a strong book to bill ratio, which is above 1, there is continuing momentum in terms of their sales growth ahead. And this is a critical quarter now that we are entering into for TCS to evaluate what the future is likely to be, because most of the budgets get for their clients get discussed around this time, and they get the scenarios that they had been discussing with various clients would have now crystallized into hard budget numbers. So in such a situation, a guidance from them, from TCS, would be very important. But like I said, going into the quarter, the strong order book and an improvement in margin was critical to TCS, and on both counts, I would believe that they have in a way delivered. A slight disappointment would be was there on the margin front, obviously, but nevertheless they did show almost 50 bits quarter-on-quarter improvement.
Mitul, just a quick question to you. You think it's more of numbers related reaction which will happen tomorrow, but after 2 days it'll start following Nasdaq?
Yes, tomorrow probably it would be a range bound reaction based on the mixed result. But post that, and definitely next 2-3 days, other IT giants are also reporting their numbers. So based on that, overall sector movement will be decided after these 2-3 key results comes out. And management commentary, of course, result may be great, but going forward, FY24 outlook in this uncertain environment is more critical.
Right. Mahantesh, also just wanted to understand, generally, TCS would set the tone for others. You think from others now, what sort of expectation would people have?
I think the same trend, margin improvement will be very critical for all the other IT companies, because they have all suffered from large attritions.
Mahantesh, the TCS press conference is starting in. Let's listen.
And importantly, a big milestone for